Hello and a warm welcome to today's discussion on the Genius Act. On July 18, 2025, the US government enacted the Guiding and Establishing National Innovation for US Stablecoins Act, better known as the Genius Act. This legislation marks a significant milestone in shaping how digital assets may be used in corporate treasury and beyond. To help us unpack what this means, I'm here in the CTMfile studio with Craig Jeffery, managing partner at Strategic Treasurer, a leading treasury consulting firm. Craig, it's great to have you here in person.
It's good to be here. I'm excited about talking about the Genius Act. I think there's a lot of promise finally on the digital currency front.
So let's start with the basics. Craig, what exactly are stablecoins?
Well, most of us think of digital currency as currency that fluctuates in value extremely rapidly. So they're extremely volatile. Like think of Bitcoin and some of the other coins that are not pegged to a currency. Stable coins are digital currency that is pegged or has to track a particular currency. In the case of the Genius Act, that'd be pegged to the US dollar. It's pegged to the US dollar and can't be unpegged or unreleased from that. So a dollar will be a dollar. As the currency fluctuates, generally it'll track with that exactly.
Thanks for the explanation, Craig. Now, moving to the recent legislation, what is the Genius Act that was signed into law in July?
The way we read it is that it is a very helpful framework for payment stablecoins. Much of the discussion about do we use digital currency, can we use digital currency, has really been focused on individuals. It never seemed to make sense to us for corporations to use digital currency. Now there's a framework that provides a safe way to run and develop and use digital currency, payment stablecoins, for transacting business. So doing it on the blockchain in a very safe way. So it addresses all of the major issues that companies had, or the most of the major issues that organizations had of why would we move to a new type of currency or new settlement method. This removes all of the biggest issues from that.
A central part of this law focuses on reserves. Craig, what reserve requirements does the Genius Act place on stablecoin issuers?
Certain types of currency was either based upon relying on reserves like gold reserves. Others are referred to as fiat currency. So it's based upon, let's say, a taxing authority. So US dollars are based upon the full faith and credit of the US government. So there's an entity that can tax, can raise and make money that provides backing for that. Stable coins don't have that backing. So the reserve requirement, the stable coins are pegged to the US dollar, but to be an issuer of payment stablecoins, there has to be 100% backing with short-term liquidity. So treasury bills, cash, items that would be considered highly liquid, highly tradable, and at 100%. So there is an asset backing the stablecoins that would be used for payments.
Beyond reserves, what are the key features of the Genius Act that people should know about?
Yeah, so the backing by assets is extremely important. The second has to do with confidence. And so things like regular audits and disclosure requirements seem pretty well organized. There's much to be done now. Just because the act passed doesn't mean it's in process right now that this is actually being traded. There's a period of time when it comes forward, when it'll come forward can be used. So if we look at audits and disclosure requirements, there's regular reporting that has to be done. What are your holdings? A regular third-party audit. And so you have to publish your financial statements and what are the assets backing up the payment stable coins that you've issued. Another element of it would be the anti-money laundering requirements. So any issuer of payment stable coins is treated as a financial institution. So it's treated like a bank and has to, comply with the Bank Secrecy Act and other AML and CFT regulations. It should provide that basis of this is not where you go to commit crimes. You're using digital currency to commit crimes, which you've seen on some of the criminals say, you have to pay me with Bitcoin or some other anonymous activity. There's also additional oversight that would be helpful on the consumer side, consumer protection that is fairly useful for people who are considering that. But the biggest issues are you got licensing, you got backed by assets, 100% backing by assets, transparency, reporting, audit, and compliance activities.
Finally, let's look ahead, Craig. What long term impact could the Genius Act have on the broader US digital asset ecosystem?
Push, I think that's a really good question. What's the long-term impact? You've known me to be a very big skeptic on much of digital currency because it was unregulated. There was a view that the US government in particular would be very against having a separate economy running where terrorism could be funded, crimes could be propagated. So there always seemed to be some limiter on what would be allowed in that arena. There's also concerns because what was it backed by? It was backed by everyone's trust in a particular currency like Bitcoin, which there was no taxing authority behind that. There's no gold or some kind of precious metals backing it. So this is backed by the world's largest economy, the world's largest central bank, if you will, with assets that are liquid. And so here it provides the ability to make payments using the blockchain without necessarily using the banking system. But it's also supported with the structure and trust that most people have, most organizations have in their banking partners, and so financial institutions. And so since it provides that framework, it becomes another payment rail, if you will, that can exist. So this is the first time that this has happened with one of the largest economy. So the largest economy in the world is offering this, which is, I think, the most significant part of it. So this provides good hope for those people who want to use payment stablecoins. There's also a lot of work being done on other digital assets besides stablecoins, digital commercial paper, some other digital trading. And so the ability to use the blockchain for that now has a broader opportunity and possibility through this framework that should allow more creativity, development, and trust.
That's a great way to frame the bigger picture. Thank you, Craig, for walking us through the Genius Act and its nuances. To all our viewers, thank you for joining today's conversation. If you enjoyed this video, please subscribe and share it with others who might benefit. We'll be back soon with more Treasury and payments focused content. Until next time, stay informed, stay connected.